It's called Diapers to Dollars, and it's how to start your wealth journey early as a teenager with a focus on having control and autonomy using infinite banking concepts. We're going to release a book a quarter. So that was now the goal, and it was publicly stated. So we kind of had to follow through. Don't Spread the Wealth is all about leveraging the family banking system so that you can own the gold, make the rules, and enjoy generational riches. Money doesn't change people. It actually amplifies who you already are. The generational wealth isn't the money. It's the knowledge and the skill set that you're providing. Mindset matters. It is the only thing that underpins success in this system. It's not the policy. It's not the advisor. It's you. Your brain is the only thing that determines if this works or doesn't work, period.
Richard Canfield joins me here again. You can head over to cashfollows.com and get a copy of his book right there, cashfollows.com. Really appreciate you throwing that out right off the bat, Richard.
Yeah, happy to do it. I'm excited to be back with you again here and see what we can do to add some great value to your amazing listeners and the real estate community as a whole.
So we're going to be touching on quite a few things, but the books are always interesting, Richard. I mean, you're about to release a third book. Is that right?
This will actually be book number 5. We actually have 3 that we're working on right now, and I just came up with a 4th about a week ago. The next one we have coming out probably end of June, early July will be Grow Your Own Capital, and it's really a book designed for farming families. Farming being real estate oriented, a lot of people own a lot of land and have their value tied into those things. So it's really about how to keep that family farm in the family where it belongs by setting up the right mindsets, the right conversations, and having the right financial tools in place so that you can reduce your dependency on third-party capital financing and finding a way to basically replace your operating line of credit as a farm operation from where you might get it at a third-party lender, a Bank of America, Wachovia, or some kind of a farm credit organization, and instead doing that with a family design system. So that's kind of the main focus. I'm very excited about the book. Actually, I just was finishing off with the manuscript the other day, and I think it's a really, really good book. It's going to provide a lot of value to farm communities. And we've got some great bonuses lined up. I've got about 7.5 hours of bonus content that when someone gets the book, they can go through several training examples. They can see some real world examples at it. And the one we have coming after that, shortly thereafter, is actually a book for teenagers. And it's written by teenagers. It's called Diapers to Dollars. And it's how to start your wealth journey early as a teenager with a focus on having control and autonomy using infinite banking concepts. My partner, Jason, who co-writes these books with me, it's his son and his nephew who are writing the book. And they've actually spoken on some stages as young gentlemen at age 15 and 16 years old. They've stood in front of over 300 financial professionals on a stage to explain how simple it is to understand some basic concepts for teenagers. And I think we often undersell the capacity that our youth has to take in so much information and be able to process it in a way that sometimes we don't give them credit for. We kind of want to preserve them from some of the stuff of the world and, just be kids. But the reality is they're going to step into the world, and there's certain lessons that the earlier they learn them, the better off they can be.
Well, a couple of things I want to hit on there. First of all, you must be slightly crazy to consider writing that many books. I can't imagine anything that would be more daunting. Like, why do you continue to put yourself through the torture?
Well, there is a degree of torture about it for sure. And to be perfectly fair, I'm not the core key person to be doing this kind of work. It's not my natural tendency. We spread the work around really effectively. And really where this stemmed from is early on in our podcast on Wealth on Main Street, we had a gentleman on who's a client of mine who had written and self-published several books, and he'd helped a number of people do that. And in that particular episode, my partner, Jason, says, well, that's just it. We're going to do that. We're going to release a book a quarter. So that was now the goal, and it was publicly stated. So we kind of had to follow through. We were a little bit late to the game. We were about maybe 2 years behind the 8 ball in getting started. And I wouldn't say that we've actually hit our quarterly target, but we've released 4. We have 3 in the works right now. We've got 2 nearing the end of their span to be ready to release, and then the 3rd one following up. And then I'm going to start working on actually an illustrated kids book for, kids around like 4 to 10 years old range. I already have it mapped out. I have the bulk of the story. It's just a matter of finding an illustrator. So I'm really excited about that because the teens book that we're releasing, Diapers to Dollars, The new one that I'm going to be doing as an illustrated, kids book is going to go hand in hand with our most recent one called Don't Spread the Wealth. Don't Spread the Wealth is all about leveraging the family banking system so that you can own the gold, make the rules, and enjoy generational riches. It's a mindset book with some tactile examples in it on how to start having powerful conversations. Real estate investors and folks that are focused on creating passive income and wealth, they're active learners and they truly want to be in a position where they're able to control their destiny, control their outcome. In order to do that properly, they need to get educated, but then they need to put it into action. But a lot of times along the way, you're so focused on learning for yourself. Sometimes we're not transitioning that knowledge base onto the people we love and care about very effectively. So this book is really about making that transition fun and engaging and powerful in a way where you're weaving stories through your family to be able to pass down what you really matter. We talk about legacy sometimes as real estate investors, and we think, well, we got this big net worth that we've built up acquiring properties over time and all this equity. And, we're doing 1031 exchanges and all these kind of things that we're up to create this environment. But then we're so busy doing it that we're not having these proper conversations on a regular recurring basis in a systematic fashion so that we can transition the knowledge. I ask people often, like, what does legacy mean to them, or what do they think about legacy? And usually people's mind goes to some dollar value, some money that I'm going to leave behind to people. But we think about like the physical realm or the physical implement of the utilization of money in some way. Very rarely are we trained to think about what truly matters, which is the knowledge and the skills that we're transitioning down to the people we love and care about most. What often happens, Jack, is that people will spend a lot of their time, effort, and energy building something really immense and valuable and putting all this energy and effort in a business, their real estate empire, whatever it is. Then something happens, they get taken out by a city bus or some unfortunate event. They've graduated early and they're no longer with us. And then everyone else that they love and care about is literally left behind to pick up the pieces, and they don't even know where to start putting the puzzle together. That is a common story that we see so often, and it just doesn't need to be that way. By taking some preemptive steps and planning effectively, bring the people you love and care about on the journey with you. And let's take this idea of conversations about money. Like, kids in the 60s and 70s, money topics were taboo. You weren't able to talk about sex, money, and politics. Well, now people are opening up about those kind of things, but money is still this taboo topic where we're not discussing it in a way that creates positive environments. It's often still this concept that might create negative energy because we're always seeking to make sure we have the security we need. And sometimes there's negative elements around money that people drag along with them in life. Well, we want to encourage people and show them a path on how to do that in such a way where, regardless of what they're building with the real estate empire, they're transitioning the knowledge and the skill sets down and having conversations that are fun, engaging, and positive to make not just the money, but the things that money is able to do for you and the freedom it provides connected as this common element that all helps you rise. You've heard the expression that the rising tide lifts all boats. Well, the rising tide in this scenario, and what we're focusing on in our book, Don't Spread the Wealth, is the family banking meeting and having that on a regular basis in a structured way where you can tie it to really positive and powerful memories, family vacations, simple things like just having your favorite ice cream and your favorite treat and playing a family game after it's all said and done. So you have these conversations that are real, but then you connect the memory to something that is so core and important and valuable to different stages of life of kids and grandkids and so on to create something really powerful.
It's really important that you're talking about this because you're absolutely right. The financial well-being of a household is usually seen as taboo. You don't talk about things, but as investors, we frequently we use the term generational wealth. Unfortunately, I think that is a really kind of a vague concept in the fact that what is the statistics? If you actually create true generational wealth, it might last another generation or two. It doesn't last long. And without this type of education, it's just not going to.
You hit the nail on the head. there's a key element that we've got right in the first chapter of our book, which is rags to rags in 3 generations. It's exactly what you said. That is so ridiculously common. And people can recognize this if I'm sure they've heard it, or they've even experienced it maybe with someone they know, or would recognize that you have someone who wins the lottery, or they come into a really large amount of money, but yet they have no money skills, or they have never had the concept of knowing what to do with it. Well, a number of things happen. Number one, all their friends that they don't remember come out of the woodwork. Okay. And everybody wants to be loved and wants friends and wants, to be liked and whatever. And so we tend to do things differently when all of a sudden all these people are around. And then the other thing is that money doesn't change people. It actually amplifies who you already are. So if you're already a giving person, it's probably going to amplify your giving. If you're someone who's scarcity minded or whatever, it might amplify that. The money isn't the common denominator. Education and mindset is the common denominator. So if we get down to the mindset level and we build a foundation at that degree, then we can build whatever structure, whatever skyscraper we want. You cannot build a skyscraper on a weak foundation. And real estate 101, if you're looking at, checking out a property's value and its core construction, you start at the foundation level. Will this thing hold and last for a long time? Do we have a giant horizontal crack going through here that, at least up in Canada, if there's a frost heave that takes place in the northern states, it's actually going to shear that thing apart and you've got a collapsing property, right? You want your home inspection to find that for you. Well, who's doing the home inspection on your mind? The home inspection on the way that you're transitioning and showing how to maintain the property to the next generation. You don't show the skill of maintaining or provide a roadmap on who to call when you run into an issue, then you're not providing systems and processes down to the people that need it. And all we're talking about is building mindset systems and processes around monetary concepts that you can use to create generational wealth. The generational wealth isn't the money. It's the knowledge and the skill set that you're providing. Because if they have those things and you've already been able to generate money, well, then they can use the same things to generate whatever they need.
Mm-hmm. Yeah, it's kind of interesting how this has always been the case, and in hindsight, we talk about, these have been taboo subjects, but in the end, where do you think it comes from? Like as a father, you kind of want to protect your kids from that type of reality, but in the end, it seems like it could possibly do more harm than good.
I'm really glad that you mentioned that. I'll give you a kind of a real world example, and I'll leverage my partner, Jason. I'll tell you one about myself as well. And really a lot of it's stemmed from what I've already seen him demonstrate. So he's got 4 kids. His oldest is a giant. He's like 6'6", plays hockey, and, awesome big kid. He's going to be writing this new book. I've known him since he was about 2 years old, roughly. He has understood this concept that we teach people called family banking. And that's because they do annual family banking meetings. And at the point now they're at where they go on a family vacation or a cruise, and they have like 20 people showing up at this family gathering. They spend an hour to 90 minutes now, and they go around and they talk about concepts. They always have our core book that we stem everything from, which is the book, Becoming Your Own Banker. It's there, it's highlighted. They read a passage, they discuss it as a group, and they have these conversations. They talk about the future, a bigger future. How do you create a future bigger than your past? And they do goal setting, and they talk about, okay, how have we used money in the family this year? What are we planning to use money for? And how are we going to treat that money? If we access money from the family system, how are we putting it back? What are some of the purchases that people in the group are looking to make? Where are you going to get the money from? So he's creating an environment, my partner, Jason, where his kids, when they turn age 18, they have a meeting already scheduled with the family attorney. When they meet with the attorney, they already know that this conversation is going to happen. They're going to be given a choice. And the choice is, look, if you guys have an opportunity to go and do your financing and banking business, borrowing and accessing money outside of the family, and you can work with, Toronto Dominion Bank, Royal Bank, whoever you want to work with, you're out and you don't get back in. So you no longer have access to the family system. Whereas if you access from the family system, and you make payments of principal and interest the same way you would do to any other banking institution back to our system, you're going to get it all back when mom and dad are gone. And if you miss payments, well, then you're also out, and we'll take what we've built for you and we're going to assign it to a charity of our choice. So he's creating a tied incentive to have a connection point about the value proposition of what's being built, and that value is very important, that you don't mess with it. And if you mess with it, there's a consequence. Now, that might be a hard line stance for a lot of people, but there's a lot of tremendous value in it. And some of that value is based on what I've already seen develop in his kids. Now, I may not be as hardlined as my friend Jason is, but I only have a 7 and a 9-year-old. Jack, I'm not sure how old your kids are, but I'm at a stage where we're still having these conversations early on, but we have family banking meetings and we talk about simple and basic things. When we access money, we borrow it from the family system. We go on a family vacation. I bought artificial turf here a while back. We make a repayment back to the system. I just say to my kids, what happens when we access money from the family system? My daughter will pipe up and she'll say, well, Daddy, we have to put it back in. Why is that, sweetheart? Because if we don't put it back in, we can't use it again later. It's literally that simple. Like, it's the concept of recycling and replenishing, but doing it inside of an ecosystem. If you think about an aquarium is a closed loop ecosystem that runs, water through a filtration unit, essentially. So you're cleaning and filtering everything and cycling it through. But if it's well maintained, you can have the fish and the things living in that aquarium live for an exceptionally long time. And you can introduce new things into it. Well, that's like the next generation being introduced into the aquarium. Does that make sense?
Yep, that makes a lot of sense. And if you found some value in what we're talking about so far, I'm going to direct everybody to get a copy of your book. Head over to cashfollows.com, where you'll go find this going into a lot more detail. Cashfollows.com. That's going to be a clickable link in the show notes. If you found some value in what we're talking about so far, this show only grows if you share it with another investor. So please consider doing that. And if you're watching us on YouTube, that like and subscribe goes a long way. So,
He's not
Richard,
lying
I think
about that. Those likes are helpful.
well, like to spend a little time on this whole infinite banking concept. I don't actually have a lot of guests on the show to talk to this because I'm going to be pretty direct on this. It seems like half of the people that want to be on the show to talk about this are insurance providers, and they might have read a single book and now they think they're an expert, and it just is a disaster. So I'm hoping from your point of view, like, am I off? You laughing, but am I off base there?
No disrespect to my colleagues in the industry, but I did find that pretty comical. Appreciate your observation. And, I don't want to claim to be the best thing since sliced bread, because there's only one individual that knew about this concept better than anyone else. And his name was R. Nelson Nash. And it's because he created the concept and it's his intellectual property. And now I'm an authorized member of the Nelson Nash Institute as an infinite banking practitioner. I've gone through a course of study. In fact, I'm the 11th person to complete that, but I was one of the first ones to sign up. Took me 2 months to complete the course. And I'm now sit on the practitioner council. So we have a council members there's 5 of us that support the board of directors of the Nelson Nash Institute in their growth model to help teach more people how to do this concept. And in fact, over the last year, we have now instituted a number of additional training initiatives for additional advisors to teach them how to do this properly. We've launched a coaching academy platform. It's a 2-day event. And any new person that is approved, because you have to go through an interview process to be approved to join the Nelson Nash Institute. I don't do those interviews. It's done by the board of directors. Once they are approved, they have to pay their sign-up fee, et cetera. But that fee includes a requirement to attend that coaching academy, which is built into their fee in the very first year at a discounted price. And we've been delivering that event now a number of times, and it is astronomically unbelievable the value that experienced veterans in the financial industry are getting. And a lot of brand new individuals are gravitating to this concept because they like the freedom-oriented, kind of libertarian-oriented model that it provides about personal autonomy and responsibility and freedom around control over your money. That's fundamentally at its core level. And this concept is exactly that. It's a concept. A lot of people will go on podcasts, real estate events, and they will spend a lot of time talking about how wonderful insurance is, and that is what this concept is. That is incorrect. Infinite banking concept is not insurance. Insurance is simply a tool. It is a vehicle. You want to go and build wealth with real estate? Well, you could do mini homes. You can do Airbnb properties. You could do multifamily units. You could do farmland. You could do land flips. You can do lease options. The list goes on and on. I mean, you could tell me 1,000 ways that you can go and generate revenue in various areas of real estate. Real estate is this one giant bucket, but within it, there's hundreds of strategies to be able to generate both cash flow and long-term wealth. So to oversimplify and say it's all about real estate would be misleading, in my opinion. So the infinite banking concept is a way of thinking. It is a lifestyle that if you decide to go down, it is something that you incorporate into everything that you do in your life going forward. It is not an insurance contract. We utilize the tool of dividend-paying whole life insurance when it's structured properly. And one of the reasons we use it, other than that, is exactly what Nelson talks about, is that it actually models and mirrors very similar elements to a piece of buy and hold real estate. You get a buy and hold, typical, boring, basic buy and hold real estate strategy. You go put your 20% or whatever down, you get a traditional mortgage, you pay it off over 15 to 30 years, you take the cash flow, maybe you pay it off faster, or you take the cash flow and build it up and you go buy another one and you add to your holdings. This is really kind of base level stuff, right? Well, the same way that you would go and buy that buy and hold piece of real estate, it's going to take you, if you do assuming that you just bought a regular normal deal, you didn't negotiate the best price point on planet Earth and, really, get someone down to a low denominator, but it's going to take you 5 to 7 years through cash flow and equity pay down to be in a position where you have access to be able to get back out your original down payment capital. That same structure exists in any type of business model. It's not unique to real estate. Well, it's also not unique to a dividend-paying whole life insurance contract. Here's the thing, though. When you go buy the long-term buy and hold piece of real estate, if you go and put 50 grand down to buy your $350,000 property, let's just say, and it's going to take you 5 or 6 years to get all that back out in a normal process, a normal situation, well, that money is trapped inside of that property until such a time as you can liberate it. There's only 2 ways to liberate equity. Way number 1 is you borrow against. That's collateral. Way number 2 is you sell. Well, if you sell, what was the point of getting it in the first place? You've now destroyed your long-term buy and hold strategy. Okay, don't get me wrong. Sometimes you got to sell the dogs in your portfolio. Borrowing against is the key element. But anytime you want to borrow against a piece of brick and mortar real estate, you have to go and access someone else's pile of money. You'd have to use your pile of money or someone else's pile of money. And usually in real estate, it's OPM someone else's. Well, you have to jump through their hoops. You got to have all your ducks in a row. You got to have your paperwork. You got to have your spreadsheets. You got to have your performers. You got to have your rent roll. You got to have your lease confirmations in order to go get the financing. You're always jumping through someone else's hoops, and you're always paying someone else for access to their pile of money. Well, in the infinite banking world, you're still going to do that. Here's the difference. The someone else is the insurance company, and you co-own them. You co-own the lender. So when I take a policy loan off of a piece of an asset, which just so happens to be a dividend-paying life insurance contract that builds equity in the same way I built equity in my rental property, when I go to access it, I have no restrictions. I have total control. I decide the repayment terms. I'm going to pay some interest to the insurance company, but I co-own them. They must take their profits and give their profits back to me. They have no choice in the matter because I'm an owner. That is a closed loop ecosystem with maximum control over liquidity. It doesn't replace a piece of real estate, and it's not meant to replace a strategy of buying more real estate. It's meant to enhance. You have to save and stockpile capital somewhere. You need renovations, you need to replace furnaces, hot water tanks, decks, roofs, etc. You have to have money on hand to do that. Where are you accessing it from? If you're draining your bank account dry every time, as soon as your bank account goes down to zero, you got to go back and rebuild, but you've lost the opportunity cost on that balance. Well, if you did the same process, but instead ran it or utilized well-designed insurance contracts, just a tool, and incorporated the mindset of becoming your own banker, which you can learn about in this book, it's only 92 pages, then you're in a position of maximum control. That's really all this boils down to. The 3 magic words in real estate, they say, is location, location, location. Well, I would modify that and I would say it's location of the equity. Okay. The 3 magic words in infinite banking is control, control, control.
Well, I'm going to direct everybody to your website again if they want to get into the nitty gritty of how this actually works. So cashfollows.com, because we could overwhelm everybody with dollars and cents and doing some complicated math, but there's a lot more detail if you head over to Richard's website. But Richard, one of the things that I was hoping you could possibly share is a story of an actual client that's putting this to use. I think that type of parable might be good to hear.
Yeah, absolutely. I mean, we have a lot of those. It's easy to look at really big examples. I think actually, when we think about more of our day-to-day use of money and the things that we need to do just to get through life while we're trying to build our real estate portfolio as an empire, you know, we like to look at cars as an example because it's a common denominator that everyone's driving a car. And if you look at most households, there's usually two cars parked in the driveway. There's no room in the garage because it's filled with all your junk, right? All the renovation materials for the next project you're working on. So you have two cars parked in the driveway. Well, I've asked this question to thousands of people. How many cars have you purchased up to this point in time in your life? We get varied responses. On average, you have someone in their mid 40s to early 50s, they've purchased about 4 to 5 vehicles throughout their life. And they say, okay, how about your spouse? Okay, great. Well, then we add another 3 or 4 vehicles. So we're at 8 vehicles. And they say, well, is the one you're driving the one that's going to take you to the grave? Probably not. You're going to need a couple more. Well, how many more are you going to need? By the time you finish the exercise, what we figure out is that on average, most people in North America will own approximately 8 to 9 vehicles over their lifespan. Okay. So if you just add up what it costs you to go buy a vehicle today, average price point of a vehicle in the US is probably around 35 to 40,000, give or take, for the type of vehicles that people are buying. So we take 40,000 times 10, we got 400 grand in vehicles, not including the interest that you pay on them or the interest that you give up if you pay cash. You're either going to pay cash, you're going to lease it, or you're going to finance it with a third party. That's it. Those are your options. Stealing it is an option. I wouldn't recommend that. That's probably going to end your real estate empire real fast. Okay. So that is one of the number one reasons people have an underfunded retirement account is just the cost of vehicle usage throughout our lifespan. So if we did nothing else, but we could recover in some way through a strategic use of money, the cost of buying vehicles over a lifespan, we've made a huge impact in the overall financial condition of every average American family. Would you agree? Okay. Well, you're driving a car right now. Maybe it's got a loan on it. The loan's at 20 grand. We get started with building an insurance contract. We build it up over 1 or 2 years. The loan balance is coming down on the car because you're still making payments. Now we have enough equity in this insurance contract. We borrow 15 grand and we pay off this loan. The payment was $600 a month. You still have to make the payment, but you have to make it back to your family now instead of making it to the third party lender. Bank of America is not going to get the money anymore. It's going to go to the bank of your family. So now you redirect that same payment flow to replenish the policy loan you took. It's the same cash flow. We're just changing who's getting the money. Meanwhile, the policy continues to grow uninterrupted because it doesn't recognize that there's a loan on it. Just like your real estate doesn't know there's a mortgage on it. If it goes up in value, it goes up in value. The difference with real estate is it can go up and down. And Jack, you've seen that over your span of time, and as many of your listeners have. Whereas the insurance contract doesn't have that capacity. It only goes up. It's designed to go one direction. It has no reverse gear. So it's building and building continually. And you're paying down the loan, and that money can be direct deposited as a policy loan into your bank account, typically within 3 to 5 business days. It's very, very seamless, and it's maximum control. Well, now when your wife needs a vehicle 3 years from now, where are we buying it from? Instead of going and seeing the, Ford Credit, we're accessing from our system. We're negotiating a great cash deal so we can build savings in right out of the gate. We create a loan repayment schedule because you need to be an honest banker. If you're not an honest banker, this will not work for you. Mindset matters. It is the only thing that underpins success in this system. It's not the policy. It's not the advisor. It's you. Your brain is the only thing that determines if this works or doesn't work, period. It's 100% based on the human condition. You develop that amortization working with a coach. You commit to remaking the payments, and you see a structure of control take place. And then you start to discover where you can use it in every other area of your life. Rather than just saying, I'm going to use this for down payments on my real estate. How about you start with the next cell phone you buy? I bought a cell phone here. It was a $1,200 cell phone, and my wife's as well. When you sign up for the payment plans, they say, well, you're due for an upgrade, and all you got to do is sign your contract for 2 or 3 years, right? That's a financing condition. They're financing the phone for you. It's the same price, but it's actually more because you're paying through their financing model. People don't realize that's the case. Well, if I can go get a deal or look for a sale and I go get the phone that I want, I could take a policy loan and go pay cash on Visa, and I pay my Visa off. I get my points. And then instead of paying for the extra insurance premium to replace the screen when Richard drops his phone and smashes it, I can take the same premium I was going to pay those guys. I can add $2 or $3 on it, and I can create my own private insurance model. Because if I do smash the screen, I'm replenishing the value back to my system rather than someone else's. It's a replacement value cost at a micro level. Okay, well, that's a $1,000 item. There is no difference. It's all scale.
Well, Richard, this is always such a great conversation. I'm going to direct everybody to your site again. Take advantage of getting that free book there, cashfollows.com.
Well, I think that we talked about this probably a little bit last time, Jack, but I'm a big fan of the Kolbe Index. And it helps understand your natural instinctual way of doing things. Since the last time I was on your program, I've actually become certified in that. And for anyone who does have it or doesn't, I'd encourage everyone gets their Kolbe Index. It's $55 US. You go to Kolbe.com. But I became a certified consultant with Kolbe about a year ago. And I always planned on doing it. It just took me 10 years to get there. And unfortunately, Kathy Kolbe, who developed this, she passed away about a month and a half ago. She passed away in April. She was in her late 80s, and she was an incredible human being. I got a chance to meet her last June, and wow, just an amazing enigma of a person. There's people in your life that come into your life that really shape and change the way that you view the world in a positive way to create a bigger future. She was one of those people. Nelson Nash, who wrote Becoming Your Own Banker, was one of those people. And another gentleman is Dan Sullivan of Strategic Coach. All three of those characters have had a massive influence on my life. Recognize who's done that for you and make sure that you spend as much time with them as you can, number one. And if it's at all possible, every real estate investor that listens to your program, I think should have their Kolbe Index. And if you're in partnership with joint venture partners, or you're doing like development work and you have like close partners you're working with, you should have a Kolbe for that person and work with a consultant to get what's called a Kolbe. It'll identify areas of potential conflict and give you strategies on how to navigate them. It's really, truly powerful. And when you know your instinctual way of doing something and another person's, you don't have to fight about how they're doing it different than you. Instead, you can maximize how they're going to do it different than you because it's going to add more value to your overall project. Think about it that way. It's really game changing when you understand not how people are different than you, but why them being different is an advantage.
That's interesting. Well, if you're ready, Richard, let's dive in and we'll close out this episode.
Sounds good.
What lie do real estate investors often tell themselves?
The lie that they tell themselves is, I will plan for my transition later. I'm so focused on building the portfolio now that I'm not going to put any energy in to stopping and planning a robust system that I can transfer on if something happens to me. They don't plan for protection, and they don't realize the impact that they're going to have when they leave the estate behind and how devastating it can be to the people they love and care about. And all the work sometimes is for nothing.
If you could go back in time and give your younger self a piece of advice, what would it be?
That I am an IP company, and I would register and start locking down my IP ideas now that I know more about that as early as humanly possible. And now with the technology today, I would leverage my friend Carrie Oberbrunner's system at instantip.today, where you can register IP ideas on the blockchain with an immutable timestamp for $97 US per idea.
Do you have a book recommendation?
Definitely a recommendation. Number one would be 10X is Easier Than 2X by Dan Sullivan. And then the next one would be You Are an IP Company, which is by Carrie Oberbrunner. Phenomenal book, really great actionable advice inside of that book.
And finally, what single strategy or tool have you implemented that has had the biggest time-saving impact to you or your business?
Time-saving tool would have to be the Kolbe Index. The knowledge of understanding how I get things done versus what the world tried to force upon me as a kid and growing up, and knowing that it wasn't right and that I was doing it my way, the right way, but having to defend that, being able to have that clarity and the vocabulary and the language to explain it to others and to just be able to launch forward in an unapologetic manner around what my natural gifts are has been game changing.
Well, Richard, this has just been fantastic. Really appreciate your time again. I hope you'll consider coming back.
Absolutely.